This current seller's market has had sellers on a bender, the likes of Fort Lauderdale spring break circa 1984. But with the feds hiking the rates a half a point in May, are those glory days over? I'm Carol Ann with The Real Deal, and the answer might surprise you. Now, mortgage rates are still going to go up, but the pace should slow down. And several forecasters are saying that they expect that it will top out in about the 6% range. Now, the conventional wisdom is that when rates go up, prices go down. That's what I thought, and I've even said that on previous videos, but that's not necessarily true. If you look back in history, check out the times where that interest rate has gone up a point or more in a short amount of time, like less than 2 years. For those periods of time, home prices actually went up an average of 8%. Now, the flip side is that the number of home sales goes down. But if you take out the weird times, like the 2008 crash when things were just crazy, in normal times, that average of home sale decrease is only 2%. Now, you might say, isn't that going to shrink our buying pool? Well, yeah, it is a little bit. There are going to be people who could afford it before who can't afford it now. And it's going to force the people who are on the fence off the fence. So there are going to be some people who say rates are too high, I'm getting out. But there are also going to be people who say I'm getting in, I'm going to buy a house before the rates get any higher. And with the pent up demand that we have right now, I don't think losing those few people is really going to make a difference. Now, another thing that people like to talk about is foreclosures. But unlike the 2008 bubble, when that popped and prices started to go down, people didn't have any equity in their house. So once they owed more than the house was worth, they just walked away. Today, people have a record amount of equity in their houses. They are not likely to walk away from that. So I don't think that foreclosures are going to be anything more than just a little blip on the radar. According to the Home Expectation Price Survey, prices for 2022 are going to appreciate 8 to 10% and then another 3 to 5% each year for the next 4 years after that. That means if you buy a house for $360,000 today, you can expect to gain $96,342 in equity in the next 5 years. Not bad. So even though interest rates are rising, they are not likely to outpace that appreciation. And one final thought for you to remember. People don't move because of interest rates. People move because life happens. So if you've decided now is the time to sell your house, please make sure you watch this video so you can avoid some of the common mistakes that sellers make. It'll make life a whole lot easier for you. Thanks for watching. See you next time.